So, good morning, guys. I'm sorry for not able to meet up with the live session I promised yesterday. Um, my network was so shitty. Then, me just trying to wait for it to maybe get better. I slept off because I was pissed with the network. You understand? So, my apologies. So that's why I made this video to recover. You understand? So, Um, so the purpose of this video is just to talk about um liquidity to liquidity pairing because basically that's just how I trade. You understand? And if you can understand what we call liquidity to liquidity pairing, right, you will be able to read liquidity like a pro, and it will like you'll be able to like avoid those unnecessary stop losses. You understand? So in liquidity to liquidity pairing, right? Um we have two ways price moves. Number one, the first way is either to fill a fair value gap, and that's what other people call imbalance. You understand? And secondly, either to sweep a liquidity, that is a swing high or a swing low. You understand? So that's just how price moves basically. Either to fill a fair value gap or or to sweep a liquidity. You understand? So for instance now, yeah, let us just assume this is a swing high and a swing low that I marked here on this image here. In between a swing high and a swing low, there's always something which I call resistance zone. And what's that resistance zone? Is a fair value gap. You understand? Because price can choose to decide to maybe move up, act bullish. Then when it gets to this resistance zone, two things happens. Either to react at this resistance zone, which I call the fair value gap, or like either to react at this resistance zone to like sweep this low, or either towards to react at this resistance zone, then break it, then continue higher to sweep the swing high. You understand? So that's just basically how price moves. And some people they'll be trapped, you understand, in between this resistance zone because they might be buying. And once price gets to this resistance zone, price might just change, you understand? Then continue selling and buyers get trapped, which leads to like stop losses. You understand? So that brings me to fair value gap. Now, if you are a newbie seeing this, or you're somebody that wants to learn how to read liquidity like a pro, please pay attention to what I'm going to say now because um you might forget it later. So I will advise you to um get your books and your pen ready. You understand? So you can jot it down and later back test it yourself. So in fair value gaps, we have three types of fair value gaps. One, we have the deep retracement fair value gap. Secondly, we have what we call breakaway gap. And thirdly, we have the consolidation fair value gap. You understand? So for the deep retracement fair value gap, we know how a fair value gap is formed now. Like the first candle, normal candle, then the second candle, an expansion candle, then the third candle for a deep retracement fair value gap. The third candle will be like something like this, yeah, but it will fail to like go higher than this other. It will fail to like sweep this candle high here. You understand? Then at the end, you have something like this. This kind of fair value gap formation, right, is what we call the deep retracement, and it is a low probability fair value gap. Like for this type of fair value gap to be expecting is very like it's not common. You understand? It's not common. Maybe only if I don't know, but it's not common. You understand? And if maybe anything is going to happen in this fair value gap area, maybe maybe you are getting a confirmation from your lower time frame, because it's not even advisable to like enter like aggressively. And we have some fair value gap traders. Once they send a fair value gap, they'll just put their long position to play something like this, then long. So this kind of fair value gap formation is a very low probability fair value gap, very low. You understand? So even if you are going to trade this fair value gap, this type of fair value gap, right? Maybe you are entering with a confirmation. You understand? So that is one. So secondly, we have the breakaway gap. You understand? Whereby price we instead of price to like just give a minimum candle, then what price does is like expand again. You understand? This type of fair value gap is what we call the breakaway gap. You understand? Because the breakaway gap is just a neglected fair value gap, because this fair value gap that happened here might become neglected. You understand? Price might not come to fill this fair value gap again. Instead, what price does is price can just give another fair value gap again, which I will call the third candle the consolidation fair value gap. You understand? So a consolidation fair value gap, because this candle now is being neglected, like it's a breakaway gap already, because price has done another, the third candle has gives another expansion. You understand? So for price coming to this fair value gap again is is a low probability. You understand? It's a very low probability, because instead we now have another was fair value gap at this place, and which is the um the highest probability fair value gap, which is the consolidation fair value gap. You understand? The consolidation fair value gap, right, is whereby the third candle would sweep this area and close inside. It's different from the deep retracement, because price did not sweep this high at all. You understand? Price did not sweep this high at all in deep retracement. That is what we call deep retracement. But in consolidation, price sweep the high of the second candle, then it closes inside. That is a consolidation fair value gap, because we are expecting price to do what? Trigger at this fair value gap and continue moving. You understand? So those are the types of fair value gap. Now, in breakaway gaps, there is something ICT terms call immediate rebalance. You understand? Um, that will make me talk about candle science. Now, in candle science, we have two types of candle. We have the respective candle and the disrespected candle. You understand? So in breakaway gap, sometimes price might just give this type of fair value gap. You understand? Then okay, let me use the proper diagram to explain. Let us say okay, um sorry, trying to make the diagram. So let's just say okay, this is the second candle expansion. Then sometimes what price does sometimes is just a breakaway gap, give a very long wick. You understand? A very long wick, then a small body. You understand? A small body, like a very small body. And that kind of candle can be a dodgy candle. You understand? For people that knows about candle science very well, that body can be a small body and a very short wick. You understand? This kind of this kind of it's too long. So this kind of candle can be taken as what a breakaway gap. You understand? Because in ICT call it immediate rebalance. You understand? Whereby if we go lower on a time frame, you understand, you will see that price has reacted on a fair value gap. Like let me show you an example. I think I took a trade on JP225 last week. So, for example, now this is what I've been trying to say since. Yeah. So let me off this indicator. Then on my daily time frame. So this is it. We know that now this is what I'm saying. This is what a fair value gap, right? This is a fair value gap area. Yeah. Right. So now the candle that causes this fair value gap, right? The candle that causes this fair value gap, what did the candle did? It's what it reacted. You understand? Now this type of candle, yeah, is a expecting candle. You understand? That's what I was trying to like draw the image out. So this kind of candle is a respecting candle. You understand? That means if you had to go lower time frame to check, you will see that price has reacted. You understand? On a fair value gap in a lower time frame to continue higher. You understand? So this type of candle is what we call respecting candle. You understand? And in ICT we call it immediate what rebalance. You understand? We call it immediate rebalance in ICT. You understand? Immediate rebalance, whereby price has reacted on a lower time frame fair value gap. Now, if I am to go lower time frame now, the 4 hours time frame, you understand? You can see that price what is reacting on this fair value gap here. You understand? It has reacted on this fair value gap already to continue higher. So that's just another type of break away gap. I don't think you understand me. Like, let me repeat it again. Now, this is a fair value gap, right? This is a fair value gap. And I was talking about respecting and disrespecting candle in candle science, right? Now, this particular candle here is what a expecting candle. You understand? And it is formed while forming a fair value gap. And I was saying that this type of candle means that price has what reacted from a fair value gap in a lower time frame. You understand? Because that is what ICT call immediate rebalance. You understand? Like immediate rebalance. Like people that don't know candle science, they might be waiting for price to like come to this fair value gap, which price will just like forget that area, then continue pushing higher. You understand? So now, in the lower time frame, right? If we go lower, you will see that price has give a reaction from a lower time frame fair value gap, which is this area here. You can see price has already give like a reaction here. You understand? People that trade fair value gap that knows fair value gap confirmation. I won't talk about that in this video so that this video won't be lengthy. Maybe in my next video I'll talk about that. Then they will know that okay, price as what as reacted. You understand? Then you just go to your lower time frame to like map your structure. Then you understand, buy from there long it to the opposing hand. You understand? So that's just the what we call immediate rebalance in fair value gap. You understand? That's just ICT. That's what ICT call it. Immediate rebalance of a fair value gap. Then secondly, sometimes price might not even show a fair value gap at all, but it can just give a respecting candle. You understand? I think that's in US 30 last week. US 30 last week. US 30 last week. Yes. This I called a signal this on my group. So now you can see that at this area, what the price did. Okay, is it a fair value gap or um I think I can say very small fair value gap. Is a very small one, a very very small, a very very small one at this area, a very very small one. But although is already what we call immediate rebalance. You understand? So you just have to train your eye to see it. Once your eye see it, then you just go lower then to trade it. It's a very very simple stuff. Candle science. You understand? Maybe in my next video I'll talk about that more. You understand? But for this video not to be too lengthy, I'll just like try to like explain it in a brief way. You understand? So now you can see that okay, this is what a expecting can do. You understand? Immediate rebalance happening here. You understand? So what I did last week was I went lower, my lower time frame to like just look for an entry. You understand? What I did was that okay, I saw that okay, price was already reacting at this fair value gap here. You understand? At this fair value gap here. Then I just went to my 1 hour time frame to map my structure liquidity POI. You understand? So I came here, I mapped it as what my liquidity area, then came to my 30 minutes. I think my PY was for my 30 minutes here. For my 30 minutes at this area. Was it at this area? I can't really remember. Okay, I used this other block here. I used this other block here, yes. So that was how I traded. You understand? That was how I traded US 30. Then my take profit was at this next draw on liquidity. My next draw on liquidity because my I had my draw on liquidity for my daily time frame. So my draw on liquidity was this high here, was that high there. So I my take profit was at that area. Understand? So the take profit was at that area. So it was 1 to 7 hour. Yeah. So that's just immediate rebalance. You understand? So that's just everything about fair value gap. Now let me just do make a video of how I do my top down analysis. How I read liquidity to trade. So you can so we can combine all what I've said together and see how it works. Now, on my I start making my analysis sometimes maybe from the daily time frame or from my weekly time frame, anyone, just to check what's happening. So don't let me use US 30 because I've talked about that already. Let me use code for an example. So okay, for example, okay, let's start from here, right? Now, like I said, in liquidity to liquidity pairing, price does two things: either to fill a fair value gap or what sweep illiquidity, which is the swing high or the swing low. Now, join me to read this price action together. So we can all agree that what happened there was what this long week is always what a swing high. Like every long week is always a swing high because if you go to the lower time frame, for example, you will see that that long week is a swing high because that makes that area what you can see is a swing high. So that makes that area what my draw on liquidity. Why? Now on my daily time frame, I can say that okay, when what price did, right? Price when price got to this area, what did it do? It did not react at that area. Instead, it broke that area with what a body, which means this area is what disrespected. So now, where is my next draw on liquidity? Now, my next draw on liquidity is what? This I here. You understand? So this I here. Because I remember that I shared um this setup on good, but it gave a missed entry. You understand? Did not trigger us. You understand? So that week, instead I was just looking for a buy setup. Now another interesting thing was that at this area here, what did price did? Price gave what? A favor, which is what? A resistance zone, right? A resistance zone at this area here. You understand? So I was waiting for price to like, because since I know that we are bullish, you understand, and we are also having this break of structure. So two things was on my mind: either price reacts from this fair value gap and we continue bullish, or price breaks this fair value gap, you understand, and come here to sweep this liquidity and we continue. So that was the two things on my mind. two things on my mind. You understand? So instead, what did price did? Price reacted on this resistance zone, which is what the fair value gap. Like I said earlier, in between a swing high and a swing low, there's always a resistance zone, which is the fair value gap. You understand? So, like for example, now gold sellers will get trapped at this fair value gap. You understand? They might be selling, you understand? They might sell from this fair value gap, then stop losses, you understand? The resistance zone, which this is just what I call CMP, you understand? Because I refrained it to my own understanding, you understand? So now, so what did price did here? Price was reacted on this fair value gap, you understand? Give a respecting candle, because this is a respecting candle, a long wick, you understand? So what did I do? I went to my lower time frame to what? To pick my entries. Then where's my first take profit? This swing high is my first take profit, and my second take profit is at this my drawn liquidity. So now going to my lower time frame area, I went to my what? My so was it 2 hours? I can't really remember. Yeah, my 2 hours time frame. Now, or was it 2 hours or 1 hour? I can't really remember. Sha sha. So now this is my this is what MSN now. MSN now they call this what the V shape rejection. So this is rejection here, right? And if you are to go 1 hour time frame, we are going to see that it's an it's an order block. You understand? So price reacted from there, then this other block to price reacted from there. So now price reacted from this area, you understand, sweeping this liquidity and making this place what a um what do they call this kind of when he protects a protected low, you understand, because it swept liquidity. So my where we fucked up like that week was because of our entry was here, like my group members can relate. This was where I was planning to enter, you understand. But what the price did after sweeping this liquidity, price just forgot us, you understand. Price forgot us, then it continued buying to where our drawn liquidity. You can see that's just how we you can see how easy it was reading liquidity, you understand? Like we are trading the way market is giving. Like you understand, we are not forcing the trade. We are trading alongside with the market. You understand? So that's just it. No stress, no strings attached. You understand? Price was reacted, swept the liquidity, then continue buying to our drawn liquidity. And you can see when price got to draw our drawn liquidity, because it's the liquidity area, you understand? And in a liquidity area, those are resistance zones. And like on the resistance zone, price can decide to like react from there or break it. You understand? So now when price got to this swing high, what did price did? Price was continued, like so it sold temporarily. You understand? So price was just doing on his own, because I didn't see anything on gold again since then. Like my vision was already blown, because I was so confused, and there's something I don't want to get trapped. You understand? Because if you are not careful, you will get trapped in between. Because now you can see on gold now there is another resistance zone area, which is this fair value gap. So this fair value gap here, let me mark it out. This fair value gap here. You understand? So for like now I'm not going to trade gold at all, because maybe only if this fair value gap here is getting respected, maybe only that will allow me trade gold. You understand? This fair value gap here, maybe it's going to. I think it's already. Oh, my bad. The fair value gap is used already, because that was what caused this sweep here. So for now, and well, we can see another what a respecting candle science. That means this daily candle forming now. is acting either from a fair value gap on a lower time frame. You understand? From a fair value gap on a lower time frame. Yes. And in a okay, let me just explain this. On a fair value gap, right? We can see price reacted on this fair value gap already. But in my own understanding, like the way I reframed my knowledge now, this fair value gap to me is just a partial filled fair value gap. And um in a partial filled fair value gap, price can come to that fair value gap area again and give a reaction from there. You understand? Because it's not filled completely. It's only if it's filled completely, then you can say, okay, price doesn't have any business to react at that fair value gap. So since this type of fair value gap is a partially filled fair value gap, then yes, price is supposed to react from that fair value gap, which is why price gave this reaction from that fair value gap. And we can see from our 4 hours again a lot of resistance zone. You understand? A fair value gap, a fair value gap. So I don't want to be trapped. So that's why I'm not even trading good at all. So let's analyze another pair together. US 30. You understand? So let me just I'm just doing examples on how I how I trade liquidity to liquidity. You understand? Just read the other flow. You understand? Then trade. So for example now, um, for my daily, okay, okay, let me start from my daily here. And please, you can also be using this indicator, nephew Sam, just for you to spot fair value gap easily. You understand? Because that's basically what I use. You understand? Just to sometimes humans are bent to make mistakes. You might not see the fair value gap on time. You understand? And I don't know. There's this shout out to Tech Chris. He did one video about fair value gap. Please watch that video. That particular place where he talked about and what did he call it? An invalidated fair value gap here, whereby um the expansion candle we have no wicks at all. Please, that kind of fair value gap is an invalid fair value gap. Please and please. And if the second candle week has already reached 50% already of the third candle, please, that is also not a fair value gap. Please go and watch. If you are seeing this after this video, just go and watch that Tech Chris video on YouTube so you can understand fair value gap very well. You understand? Because shout out to him. I used I used these his videos plus Kelvin Talent plus which other trader again, because I am a self-led trader. Understand? So their videos helped me a lot. You understand? So a big shout out to them. So so please and please, if you are seeing this video, please and please go and watch the Chris video, the fair value gap especially. Go and watch it. So on US 30, um so now what's price doing? Okay, on my weekly time frame. Okay, good. So US 30, I can say US 30 is still bullish, right? Because we have this fair value gap. But well, I cannot call it a fair value gap already because it's an invalidated fair value gap. You understand? Because this week, this week here already reached like it's more than 50%. Understand? That's what I was saying, that if you are seeing this video, go and watch the Chris video. You understand? For you to understand fair value gap very well. So now this area here, right? It's not a fair value gap. It's not um a valid fair value gap. So instead, my drawn liquidity is at this high here. So that's my drawn liquidity on my weekly time frame. You understand? So coming to my daily time frame. So what can we see? So we can see that okay, starting from here, this is an immediate rebalance happening here. Like I said earlier, this area is what immediate rebalance. You understand? So now and we add what a break of structure around this area. So coming to my 4 hours time frame. So on my 4 hours time frame, yeah. So you can see that this fair value gap is partially filled. So price has no business coming to this area at all. So I can just see either price reacts from this area or from this area. Anyone, you understand? Anyone. So you can decide to go lower time frame to like to refrain it. You understand? Like now on my two hours time frame. Okay, let me use 1 hour. Understand? So on my 1 hour time frame, I can decide to put my my entry at this area. But because I love trading like the um I love my entry aligning with the higher time frame. So that's why I'm picking this area. You understand? So and since it will give me reasonable risk to reward. So I don't mind my SL, you understand? So my SL will just be below this area, then I'm going to like buy to my drawn liquidity on my weekly time frame. So that's just my plan on US 30. You understand? That's just my plan because price reacted on this fair value gap already. You understand? And what did price do next? Price what gave what an immediate rebalance at this area. You understand? So those areas are gone. You understand? Those areas are gone. So that's just so basically I think with this video at least I've explained how I trade plus how liquidity to liquidity pairing works. You understand? So maybe okay, let me talk about this popular pair GU for instance. Now um so GU now is acting at what from a resistance zone. You understand? So um right now on GU, I'm not even trading. Like today's Monday. I don't even like trading on Mondays. Maybe if I just want to like maybe I'm having one spare money to risk. You understand? Because trading on Mondays is not always advisable. You understand? So I'm just trying to like to see what price does today with this daily candle. Like this daily candle, right? This daily candle will give me decision either to sell or buy. You understand? It depends on how this daily candle closes, like how today candle closes. That will determine my next move on GU because GU is acting from this resistance zone, this liquidity here. Understand? And we can see these two fair value gap at this area. You understand? And before that, price did what swept this high. So before I can trade now, for me to have like a perfect and like a very valid good trade, like an A setup, I will love to if I am selling, if I'm going to sell, because if this two fair value gap gets invalidated, like I said, price will move to where this swing low here. You understand? That will be our next drawn liquidity. But we are not yet sure yet because of this two fair value gap you get. So right now, what I just want to see, if we are going to buy, right, I want to see price reject this area fully. You understand? Reject this area fully. Let me go to my 4 hours to check. Maybe I can see something. Well, my 4 hours to well, I can't see anything for now. I can't. I can't at all. I can't say anything for now. So don't let me just judge because I do just want to like just judge. I love trading what I see, not what I think. Because those are two different things entirely. What you think and what you see. So on GU, I would just like to just I'll just be observing GU for now. You understand? Because I can't see anything on GU. Then if price reacts on this fair value gap, then I'll be trading on Wednesday because I love getting my confirmation with one daily candle. That's just how I trade my fair value gap. I love getting my confirmation with a full daily candle. You understand? So I can be like sure of that setup, and you understand. Because before I see my setup, right, it takes time, like 3 days. In fact, 1 week, I might not trade at all. You understand? I might just be like playing with the charts. I might not even reach my MT5 for 1 week because I'm looking for an E setup. And once I see that E setup, I love what risking tangible amount so that I'll know that okay, because before I can see another setup again, only pay, understand, it can be it can take a while. You understand? So that's why I don't rush. You understand? So on GU now is blow. Um okay, on UG, let's view UG together. On UG, yes, I'm planning to sell UG from here. Why? Let me let me clean it down. Start from the beginning. Now, for my weekly, let's observe together. Let's observe UG together. Now, price in the past weeks, price reacted this particular candle, this um respecting candle there. What did price do? Price gave a rejection, maybe because of a lower time frame fair value gap. Yeah, maybe because of a lower time frame fair value gap. I don't know, but my point is that price gave a rejection. You understand? And that rejection caused this break of structure. You understand? That rejection caused this break of structure, right? So now and since then, on my weekly time frame, I can't see anything unless maybe price comes to this fair value gap. So this area here is my draw on liquidity. You understand? I'm still selling. You understand? Because there's nothing to push price higher on my weekly time frame apart from this fair value gap here. So going to my daily time frame here. So for my daily time frame, now I'm about to say something. So what did price did here? Price reacted on this fair value gap, right? Gave a reaction, and what did it do, right? It swept this area. Now there is something between liquidity sweep and liquidity run, and how to confirm a liquidity sweep and a liquidity run. Now, for a liquidity run is whereby price breaks maybe a swing high or a fair value gap with a full body. Then you know that okay, price is running that liquidity. But a liquidity sweep. Now the question now is how do you confirm a liquidity sweep and a liquidity run for you not to get trapped? Now to my knowledge, there's something I call first thing and second thing. You understand? Now, this is what I'm trying to say. This this swing high, what the price did here? Price stinged here. This is the first thing. So that first thing, right, is uncertain. You understand? That's first thing. That means we're uncertain. We don't know what price wants to do. Maybe it wants to run it or it wants to sweep it. You understand? But later, I'm trying to read this price action now. So later, what did price did? Price went, you understand, to react on this fair value gap at this area. You understand? React at this fair value gap. You understand? So price reacted on this fair value gap. Then again, what did it do? It came to what? To stink this area again. You understand? Which is the second stink. So that confirms what? A liquidity run. You understand? Like now, I don't know. Some people right now they can be planning on like buying UG. You understand? Well, everybody has their own model. You understand? But to me, you can go and back test it. This is just a gem. I'm just saying, go and back test it. You understand? When you back test it, then you can maybe come back and call me a liar. You understand? This is just a gem. I'm not supposed to say it, but it's just a gem. You understand? Ofela fun like Ofela fun wa so Ofe náà ni màá fún everybody. You understand? I learned it for free, so I'm going to give it out for free. You understand? I don't do any paid courses or maybe any paid or maybe any VIP group. You understand? So I don't see reasons of holding back knowledge. So Price did what? He sting this area again, which is giving me what, a second sting. And since I can see two stings already, that means what? I am running. I'm not even going to, like, my mind can never even say maybe we are sweeping. Never. It's only if maybe I see a first sting, then that's just that's just a like uncertain mode for me. That means I won't know what to do. Like I said earlier, between a swing high and a swing low, there's always a fair value gap. So now price came to this fair value gap here, then it reacted, then gave another sting. You understand? Then now I'm not certain of what to do. You understand? Price came here, first sting. You understand? Came to this fair value gap, came back again, second sting. You understand? Then I know what to do. That okay, fine, yes, I'm selling. And where am I selling to? I am selling to where? Where's my next drawn liquidity? This area is my next drawn liquidity. Understand? Or I can fully say, okay, yes, price is coming to our weekly drawn liquidity, this area. But just for us not to guess, like I said, I don't like trading what I think. I like trading what I see. So what I see is giving me my next drawn liquidity at this area. You understand? Then I know that yes, I'm selling UG. You understand? Then on I'll come to my 4 hours time frame, right? Then what am I saying my 4 hours time frame? You can see price was, if you are going to read this structure yourself, that means price served this liquidity, gave a second sting, and understand, reacted from this fair value gap for the second sting. Then where are we selling from? Like you guessed right, we are selling from this area here. You understand? They're selling from that area there. You understand? So for me, I'm selling UG. I'm not even buying. You understand? Shout out to the buyers. I expect you guys. But me, I'm not buying UG. You understand? I'm not buying UG at all at all. You understand? So that's why I'm having what, a sell motive. That's why I'm selling UG. So I think my next video I will do a video talking about liquidity sweep and liquidity run, how to confirm it, because this video is already lengthy. So I'll talk about that very well. You understand? But with what I said, you can just go and backtest it yourself. You understand? So that's why I'm selling UG. So that's why I'm selling UG. So um I think let's just stop here. Then we'll continue some other time, because if I'm to continue like this, there are a lot I want to say, but just for the sake of this video, it should not be too lengthy. So let's just stop here. So see you guys on my next video. Cheers.